You've seen the headlines: Canadian housing crash, prices dropping, buyers disappearing. But here's what you won't see. Calgary is not collapsing. We're adjusting, rebalancing, and quietly setting up for what could be the next wave of opportunity. In this update, I'll show you what's really happening in Calgary's real estate market, what I'm seeing with my own clients, and what you should know heading into the holidays and into early 2026. October brought just under 1,900 sales, about 13% below last year, but slightly stronger than September. Around 3,200 new listings came to the market, which helped slow the pace of inventory growth. We ended the month with just over 6,400 active listings and 3.5 months of supply compared to 4 months in September. That's more balance returning to the market, not chaos. The citywide benchmark price landed at $568,000, down about 1% month over month and 4% year over year. Detached homes averaged $744,400, duplexes $683,100, townhouses landed at $431,200, and apartments were at $318,200. Even with those adjustments, Calgary's fundamentals remain encouraging. We've added over 200,000 new residents this year alone. That's the fastest growth in all of Canada. Our job market is picking up steam, even if it doesn't feel that way for everyone. There are still people struggling to find consistent work, but there's also movement in energy, tech, logistics, and even film production. That's quietly building momentum. And while other provinces are tightening budgets, Calgary is still investing in itself. The BMO Centre expansion is fully complete, turning the Stampede grounds into a world-class convention hub that's already hosting major international events. The Rivers District redevelopment surrounding the new arena and entertainment district is becoming the city's cultural heartbeat, with hotels, restaurants, and plazas breathing new life into downtown. And the Green Line LRT, the biggest infrastructure project in Calgary's history, continues to connect growing communities and open up new development corridors. These aren't just civic upgrades, they are confidence signals. Confidence that fuels long-term opportunity. Here's what I've seen firsthand. Showings are slower. Some listings sit quiet for days, if not weeks, and then suddenly a perfectly prepared home hits the market at the right price and gets multiple offers. Buyers today are not impulsive. They're intentional. They're analytical, cautious, and jumping only when price and property line up. Developers, on the other hand, are still active, but they're adding extra cushion into their offers and project margins as a safety net. They're testing lower numbers, even compared to just 2 months ago, and they're being extremely risk adverse. If the math doesn't math, they're walking away. They're protecting their margins, not gambling with them. On one of my listings, a corner lot in Killarney, perfect for redevelopment and zoned to allow up to 8 units. We saw this play out clearly. We had 2 offers presented, one that we just weren't ready to accept, and a second that we did. Then came a backup offer. Plus, along the way, we had 2 or 3 verbal offers from people throwing out test numbers. Here's what's interesting. Every one of those offers, written, backup, and verbal, came in clustered around the same price range. And that range was well below the list price, even though we priced it based on recent comparables. That tells you 2 things. 1, the market has already adjusted beyond the last few sales show on paper. And 2, one seller's drop, desperation, or motivation ripples through the entire neighborhood. This is a market that rewards preparation, persistence, professionalism, and proactiveness, not luck. When people talk about a housing crash, they're usually referring to Ontario or Vancouver. In Ontario, average prices are still down over 25% from their peak. Calgary, by contrast, is down 10% since June 2024. A normal, healthy correction overall. And history proves it. In 2008, we saw a 12% dip and recovered in 2 years. In 2014, after the oil crash, prices dropped 10% and leveled out by 2018. Then, during COVID, we surged 43% in just 4 years. That's not the skies falling. That's a healthy market catching its breath. You can't have that kind of growth without some give back. A 10% correction after a 43% climb isn't a collapse, it's normalization. And even through this adjustment, Alberta's unemployment rate sits at 6.2% compared to 7.9% in Ontario. Mortgage defaults here are slightly higher than the national average, largely because of the speculative buying that happened in new construction during the peak migration wave. That's important context. Some families are feeling the strain, absolutely. But overall, this isn't a widespread crisis. It's the market finding equilibrium after years of extremes highs. Everyone asks, should I wait for prices to drop more? The truth is, you only recognize the bottom after it's already behind you. By the time you can confirm that it truly was the bottom, prices have already moved and the best homes are gone. If you're waiting for absolute certainty, you're also waiting for competition. Real estate doesn't move in straight lines. It moves in waves. You don't know you're in the trough until you're already climbing out of it. Meanwhile, Calgary continues building for the long term. The BMO Centre expansion has officially made Calgary a contender for major international conferences, events that used to skip us entirely. That means more hotel bookings, more business travel, and more jobs feeding back into our local economy. Just next door, the Rivers Development District is transforming how downtown feels. New hotels, restaurants, plazas, and of course, our new arena, which will anchor concerts and sporting events for decades to come. And the Green Line LRT, though years from completion, is already shaping investor confidence along its future routes. Developers are acquiring land near stations in anticipation because they know that infrastructure builds value. These aren't headlines, they're commitments, and they show that investors, developers, and the city itself believes in Calgary's long-term story. If this is the type of content you've been looking for, please show your support and don't forget to like, share, and subscribe. Locally, we've also had some major moments this fall. The teacher strike has officially wrapped up, and families are getting back into a routine. No matter where you stand, it's been an emotional season for many. Moments like this remind us how complex financial decisions can be. Sometimes what feels fair and absolutely deserved isn't always simple to sustain long term. And that's true in business, government, and even personal finance. As a CEO and business owner, I understand those balances, doing right by people while also keeping things stable for the future. That is a very hard thing to do. And just as that wrapped, Calgary's new mayor and council took office. With new leadership comes new priorities: zoning, permitting, taxation, all of which impact how quickly housing can be built and how efficiently the market functions. This is their chance to modernize housing policy and keep Calgary growing sustainably. And speaking of building, let's talk about new builds. If you're tempted by shiny new developments and get excited walking through show homes, I don't blame you, I do too. But here's a reality check. For most buyers, new construction isn't the best financial move right now. Material costs and tariffs could rise again, and builders are offering crafty incentives that sound great up front, but can hide long-term cost. Plus, if and when you go to resell, because remember, life changes sometimes in unexpected ways, that same builder could become your competition. They have deeper pockets, newer product, and marketing budgets and incentives that are hard for an average person to match. Unless you're planning to stay for at least 7 years and ideally closer to 10 or more, focus on established neighborhoods instead. I'll break this down in more detail in my next video, which I highly suggest that you watch. Now, let's talk about interest rates. The Bank of Canada cut again on October 29th, bringing the overnight rate to 2.25%. That's progress, but perspective matters. Rates today aren't high. They're actually normal when you zoom out. Through much of the 1990s and the early 2000s, rates averaged 6 to 9%. In the early 1980s, they peaked at an unimaginable 18 to 21%. So compared to that, today's rates are moderate, even healthy. They're likely as low as we'll see for some time, and they create more of a stable foundation than the ultra-low unsustainable rates of the COVID era. Markets don't expect another rate cut before year-end, though one in early 2026 is possible if inflation keeps easing. This is our new normal, and that's a good thing. It's sustainable, predictable, and long-term friendly. For buyers, this is your leverage window. There's more choice, less pressure, and sellers are negotiating. But leverage doesn't last forever. Inventory dips in December as sellers pause for the holidays. By early to mid-January, serious buyers are back, and competition tends to pick up pretty fast. But if you find a home that fits your goals and the math makes sense, don't overthink it. You'll only realize the bottom once it's already behind you. For sellers, timing is everything. We're entering that seasonal slowdown. Things naturally quiet down heading into Christmas. That gives you a small but powerful window right now. If we list soon, we could still sell and have you move before the holidays. Maybe by early December or right before Christmas. If you wait too long, you could still sell, but it might mean staying on the market into January or even moving in February or beyond, depending on how the new year unfolds. So it's really about what kind of timing fits your comfort level. Move before Christmas or ride out the holidays and stay visible through the start of the year when activity picks up again. Either way, preparation matters. Declutter. Fix, stage. If you'd like my home prep checklist, comment declutter and I'll send it to you. And this is not the time to cut corners or list with a discount brokerage. Who you work with matters. That's exactly why I hired a full-time marketing manager. Even in a slower market where deals are fewer and everyone's stretched thinner, I wanted to make sure every listing is advertised daily, no matter how busy things get. With Calgary's Finest, it's not just me, it's systems, strategy, and full-scale marketing that ensures your home stands out. And for any realtors watching, I'm looking for agents who already have a brand, who want to amalgamate, elevate, and dominate under a proven system. I'm not rushing to grow. I'm looking for the right people who want to win the right way. So where does that leave us heading into 2026? Calgary is not crashing, it's correcting. We're stabilizing after a period of massive growth. Showings may be quieter, buyers more selective, but confidence is quietly rebuilding. Mortgage defaults remain manageable. Population growth is strong and billions of dollars are being invested into Calgary's future. Good homes priced and presented right are still selling, sometimes even in multiples. Every drought ends in recovery, and this market right now, it's already starting to turn. I'm Mariangela with Calgary's Finest, realtor, CEO, and proud believer in this city's potential. Whether you're buying, selling, or planning your next move, now is the time to prepare. Because opportunity always rewards those who are ready. Let's move forward strategically and confidently.